What is the market priced in, Professor Siegel, versus not at this stage?
I think the market is struggling. The stock market, I think profits are going to be good. So as we know, stock prices are the numerator, which is profits discounted at some sort of interest rate. So I do think that interest rates are going to get higher than the market thinks. However, I think that corporate profits are going to stay very robust. So although we're not going to certainly do as well as we did 2021, I still think that we could end 2022 with a slightly up year in, let's say, the S&P 500. I do not think NASDAQ. I think we have a rotation towards value stocks because they're shorter duration. They're not going to be affected by these interest rate hikes as much. They're going to do better. Just a couple days ago, the ultimate value stock, Warren Buffett's Berkshire Hathaway, hitting all-time highs. That shows you a tremendous shift in investor psychology, which I think is going to persist throughout this year.
And the slack somewhere is going to get picked up on the value side. I get that. Professor Siegel, then give me a sense of the level that you see the S&P 500 closing at this year, because we're at 44.56. We've had a great 2020, a great 2021. You're saying we could be in with, slight gains in 2022 as well.
We could have still back to where we began. So the S&P, we're in correction mode from the all-time high reached on January 2nd. I guess we're down, 8, 9, 10%. I think we can gain that back in the second half of the year, and maybe another 5% after that. But I do think the next 4, 5, 6 months are going to be difficult because I think the Fed is going to do a series of 50 basis point moves and a reduction in the balance sheet that's going to be pretty rigorous. And at this point, I think the market is not yet prepared for that tightening that the Fed is going to do.